Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories in corporate filings, sometimes with a side of Schadenfreude. Today we're diving into Superior Group of Companies Inc. and their latest report, which reveals a fascinating peek into their stock repurchase strategy. Something that sounds a bit like finding a secret stash of company candy to gobble up. So the big news here is that Superior Group of Companies Inc. is getting ready to buy back some of its own stock. Think of it like a big company deciding to buy its own shares from the market. This is officially happening starting the 20th of September 2025. They are planning to repurchase up to a certain limit of their common stock, which is the stock that you and I can typically buy and sell on the stock market. This is all part of a plan to buy back shares that was already approved by their board of directors back in March of 2025. It's all being done according to a specific rule called Rule 10b5-1, which basically helps companies repurchase their own stock in a way that does not look like they are trying to unfairly influence the stock price. This repurchase program is going to be managed by an outside broker and will have certain rules about the price, the market conditions, and how many shares can be bought at any given time. This just ensures everything is above board and transparent. Essentially, they are setting up a structured way to execute their previously announced stock buyback program. This means they are not going to be making these purchases on a whim, but following a pre-agreed plan. The company is essentially saying that an independent company will handle the buying and selling to avoid any appearance of insider trading or manipulation. They are setting limits on how much they can buy and when to make sure it is fair to everyone. Now, I know what you are thinking, why are they buying back stock? Well, companies usually do this for a few reasons. One, it can signal that management believes the company stock is undervalued, meaning they think it is a good deal to buy it back. Another reason is that by reducing the number of shares available, the earnings per share can go up even if the total profit stays the same, which can make the stock look more attractive to investors. It can also be a way to return money to shareholders indirectly. Looking at Superior Group of Companies Inc., though this is a pretty straightforward announcement, there are no specific financial numbers reported in this particular 8K filing, just the intent and the mechanism for executing a previously announced stock repurchase program. This document is mostly about the procedural steps, showing they are putting their plan into action. So what's my take on this? Well, it's good that they are being transparent about their stock buyback plans. The fact that they are using a 10b5-1 plan is a standard and responsible way to manage these actions. It shows they are being careful about how they repurchase shares and are trying to avoid any perception of impropriety. The real question, though, is what is the underlying financial health of Superior Group of Companies Inc. that allows for this buyback? As this document doesn't provide those details, we'd have to look at their other recent filings like their quarterly earnings reports to get a true picture of their performance, their revenue, their profits, and their debt levels. A stock buyback is a good sign, but it's only one piece of the puzzle. For example, if the company has a lot of debt and is struggling to make payments, buying back stock might not be the best use of their cash. Conversely, if they are generating strong profits and have a healthy balance sheet, then a buyback could be a smart move. Without seeing their latest financial statements, it's hard to say if this buyback is a sign of strength or a distraction from underlying issues. However, based just on this filing, the direction is clear. They are actively working to manage their share count and potentially boost shareholder value through this repurchase program. The key risks for any company undertaking buybacks include overpaying for their own stock or depleting cash reserves needed for growth or operations. The opportunity is to signal confidence in the company's future and potentially increase the value of remaining shares. In conclusion, Superior Group of Companies Inc. is executing its stock repurchase strategy as planned. This is a positive procedural step that shows good corporate governance in managing share repurchases. Investors seeking the full context should always reference this with their latest financial reports to understand the financial capacity and strategic rationale behind such actions. Alright, that is our quick decode of this filing. What is your take on stock buybacks, and what do you think Superior Group of Companies Inc. is signaling with this move? Drop your thoughts in the comments below and let us know what other companies you want us to decode. If you found this helpful, give us a thumbs up and subscribe for more insights into the world of corporate finance. And hey, don't forget to join our Discord community linked in the description. You can get even more direct insights and engage with fellow watchers. Thanks for tuning in. See you next time.